Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Tuesday, May 20th. Firstly to the S&P 500, and here we've seen a change of trend today. Previous day's trading we had the market testing to and just above the 1883 level of resistance. Haven't seen any follow through on the market testing up to the highs. The sellers coming in today, changing the trend to the downside, closing with control, showing some downside momentum, but finding support at the important 1867 level. This level has been tested on multiple occasions in the past and price action has been rejected from there, so it will be an important level for tomorrow's trading. If we do see the market trading down through there, we should see strong support coming in at 1858. We have a previous level of support, and also the Kijun-sen trading around there, and just below there down around 1855 we have the top of the Ichimoku cloud, so there is some solid support just below where the market's trading. Moving to gold and continued indecisive trading, a very small bodied candle, a candle where we've seen a change of trend to the downside, but we have seen the Tenkan-sen, the green line here, holding as support for the market probing down below there, but failing to close down below. The buyers have taken back control of this market, whereas the sellers were strongly committed to taking this market lower throughout the trading day, but they fought back. The problem here for the buyers is that we do have very solid resistance around this 1300 level with the Kijun-sen trading there as well. So any potential rally may be halted there or just above there at 1309. We do have a bearish market in the long-term and medium-term timeframes and supported by the Chica span at the moment. That may not be the case tomorrow, depending on how we trade, but it certainly does suggest that this market may trade down to lower levels. But each time that we've seen this market attempting to trade down to lower levels in the last couple of weeks or so, we have seen the buyers coming in at higher levels, and that's suggesting that there is a possibility of a breakout to the upside. But also over the last week we have seen sellers coming in at lower levels, so we're seeing a convergence of buyers and sellers here accepting lower or higher levels. Importantly, when we see the breakout, it should be quite a decent move. So in a higher time frame, we are seeing something of a congestion. To the downside, however, we do have that strong resistance at 1266, and to the upside above 1300, we do have that 1309 level, and then the Ichimoku cloud will come into play. Next to light sweet crude oil, and today we've seen the buyers come in strongly into this market, with the sellers losing commitment down below the Kijun-sen indicator around the 101.87 level. We've seen the buyers take control of this market, and we've had some good follow-through following this white body candle that changed the trend for the previous day's trading. There is a very good chance of this market trading up to the 103.39 level, and we should watch how the market reacts around there. There is potential for resistance coming there, but we do have a bullish market in all three timeframes at the moment, trading above each of these Ichimoku indicators. But looking here at the Chica span, that's not supporting the bullish activity. It's suggesting that there still is some negative momentum in this market, and does raise some doubt about whether we will be able to break out above the 103.39 level. If the market does come off again, solid support once again around the Kijun-sen indicator at 101.87. Next to wheat futures, and following that very strong trade down from the 740 level, and the market trading within the Ichimoku cloud, giving us a neutral market in big picture terms. Today we saw the market attempting to rally with a change of trend, a higher high and a higher low, but we've seen that the price action rejected from above the Ichimoku cloud. So now the Ichimoku cloud is holding as resistance, and it does suggest that there may have been something of a strong change of sentiment in this market. It's really supporting the change in the bias from bullish when we're trading above the cloud to being neutral, and suggesting we could see this market trade lower. Even though we have seen the market attempt to rally and change the trend in the first time frame, we've seen the sellers close with control, and that suggests that we could see that first time frame trend change back to the downside. We should see strong support coming in around 656, recent support, and if we do break out down below there, we should see solid support down around the bottom of the Ichimoku cloud at 636. But as we move further into the trading week, that area will actually move up, and within the next week and a half, it will coincide with the 656 level of previous support. Now, if we do see the buyers continue in this market, obviously once again the Ichimoku cloud at 677 for the new trading session may come into play, and also that 683 level once again. So some fairly solid resistance overhead. Looking at the Chica span, that is within the price action, so it's not confirming the bearishness that we're seeing in the medium and fast term timeframes, but is suggesting that the market is in a state of indecision in that longer term timeframe by trading within that neutral area of the Ichimoku cloud. Next to the US 30-year bonds, and here we've seen a white body candle at the end of this first time frame downtrend. Today's candle was still part of the downtrend, but finding support at the Tenkan-sen indicator and at the swing low around the high there was at 136.22. The switch in the colour of the body from black to white suggests that now momentum in net terms has swung back to the buyers, and it is suggesting a possibility of a change of trend to the upside. If we look at the series of higher peaks and higher troughs in this market, it is suggesting that we are going to see a swing low somewhere here and the buyers come back in. So we should be watching the high of the current candle at 137.17 for a potential change of trend to the upside. 137.25 has provided some resistance in the past, and it will be an important area that the market may test to. But with this market being bullish in all three timeframes above each of the Ichimoku indicators confirmed by the Chiker span, it does seem as though we will see the buyers come in and the market test to higher levels. If we can trade through the swing high at 138 from a candle from 4 trading periods ago, we could quickly see this market testing up to the 138.